Please. Hello. Good morning. It works fine today. I'm happy to see colleagues, partners here. I also attracted around through crowd investing platform. I love the theme. Well, they say that moderators should be unbiased, but I actually like all the new instruments giving opportunities to the entrepreneurs in the market. And if you're here, it means that this is useful for you as well. So let us know each other a little bit better. So are you entrepreneurs? Are you raise your hands if yes. And the rest of the audience are investors, or you are preparing to start becoming investors. So the majority. So you are also a prepared audience. Let's applaud. Thank you. And now let's start. Colleagues, let's start with the following. Changes in the investment market are obvious, and opportunities for entrepreneurs are growing. I'm always positive. What is the reason for emerging new instruments to raise money? Gleb, let's start with you. A good question, by the way. I think that there are a lot of reasons. From one hand, venture gets more popular and it is getting into the masses. People now know what startups are all about, and they know that you can invest into startups. Number two, this is about changes of macroeconomic indicators. So people have capitals, and part of their capital can be allocated for high-risk investments. Venture is high-risk investments. And now, for instance, previously venture was an elite thing, an elite instrument to invest into startups. You had to have large capital for venture investments, and everyone thought that the entry point is very high. But thanks to changes in the market, it goes down, and there are business angels, and the entry point is reduced down to 1 million rubles through various investment platforms. Entry points are going even lower. You can invest less than 1 million rubles, and that's cool. And wrapping up, I think macroeconomics is impacting the situation. People bring their money to ventures, but not all their money, but just part of their portfolio. Thank you very much, Gleb. I'm interested. Nimesh, what is happening? Is it a global development? Do you see the same things happening in India with alternative investments, with small checks? Is it a macroeconomic reason to that?
Thank you for the question. I think to add to what Gleb also mentioned, that what is happening across the globe is that you are seeing democratization of that entire startup investing ecosystem. And the biggest catalyst for that is, of course, technology, right? Because technology allows the opportunity to go en masse. Every person now has access to an app or a platform where they can look at investing, including small ticket sizes, as you mentioned, around $1,000, right? So I think that is the biggest factor, I would say, which is catalyzing this. In India, in fact, we have quite a few platforms which are doing that. And we are now seeing a lot of global money also coming into India, right, through angel platforms. So there are quite a few SPV platforms that have come up, which actually enable a lot of foreign money to come into India through the SPV platforms. So multiple layers of platform. Earlier there used to be only a platform which allows access to startups, and now you have SPV platforms which allow access to these platforms and which allow you to invest into the companies.
Thank you very much. Indeed, we will clarify about the opportunities for Russian entrepreneurs to participate in such platforms and for international investors to invest into Russian startups. But now I am interested in the following. Macroeconomics, as Gleb says, and the tech simplicity of entry into the platforms. You are mentioning this. Representatives of platform colleagues, this check with $1,000 with which you can enter. Is that true? What do you see? What investors do you have in your crowd investing platforms? Well, let me start, if I may. Anton from Rounds, just wanted to remind you my name. Yes, there are cases like that. The Brainbox platform, one of the most democratic platforms in the market in terms of average check. 10 million rubles deal, actually, it is a check, it's $10,000, and investors come in with checks of 5 or 10,000 rubles. That's even less than $1,000. So this democratization is what we see over the recent couple of years in Russia. In the United States, it started earlier than that.
And we have to say that the infrastructure and the part of investment platforms are not very ready to this kind of thing, because there's a procedure of transfer of securities, and the cost of processing might come up to a very high number for smaller rounds, for rounds of 10, 20 million. The cost, organizational cost, can come up to 500,000 up to 1 million, which is quite significant because it's just to support the process. So that's the trend. The infrastructure currently is not yet ready, I think, and we're working at that and obtaining new license. So that's your direct objective, to develop and look for ways to help investors. So it's interesting to hear about the portrait of people with small checks. What is this new type of investor which are born for these macroeconomic conditions? Good morning, everybody. Would like to also add about why they appeared in the first place. Well, I have a cool case. One of the contractors who are helping us at Zorko, guys that working with platforms from non-friendly countries, let's put it this way, and where the industries are more mature, and they are talking about the cases they're collecting investments to buy horses for horse races. You mean horses for races? Yes, indeed. Just one day prior. I mean, it's classical crowdfunding, right? Yeah, but it's cool, isn't it? Because people are investing. They have this culture. We are just starting it. So, I mean, it's a way of capitalization of assets. Yes, if you segment investors who participate in our placement, I think I would split them into the following. First, retail investors with smaller checks. But in the majority of cases, it depends on projects and company that can thus fine-tune the lower threshold for investors. Now it's about 30,000 rubles. What do you mean retail? Let's translate it into human language. It's non-qualified investors, right? Well, yes, they might borrow 10 to 15% of the total check. It depends on the sum of placement, of course. But second, it's not high nets, of course. Those who can have their strategies and dig deeper into the projects, and totally they do have some culture of investing. Number three is high nets and ultra high nets. I think they cover 50 and more % of the deal. And strange it might seem, the format of attracting when the deal is fully structured, that's a great way for his relatives, for his friends in other businesses, a great way to enter his business legally through a broker, and that's very good. Or speaking about simplicity, well, Anton, I think you will have to clarify as to whom is it more comfortable and easier for investors or entrepreneurs, those services, and who's those entry barriers are erased. I mean, the proportion is simplicity towards investor, because for entrepreneurs, the corporate procedures, they are plus minus are similar. They have to set up a legal entity to accept investments and set up corporate relations through corporate agreements and all, and the charter and all. So the mechanics is still there. It's similar, but the way of the deal closing is different. It used to be a notary. Now you can do it online using the platforms. The changes of the law 259 were designed for investors because now they have an opportunity to close the deals just registering at the platform. You just click the button. Well, of course, there are some procedures, but still it's easier than to go to Moscow to visit the notary and sign documents. Well, a lot of skepticism in the market because the deals are not very transparent, big number of shareholders, and clear enough that technically it's obvious. But for the next round and capitalization, sometimes people are more careful. So it's a question to Gleb and Nimesh. Please tell us how the investors of the next round, you as the visionary of the market, and how are you viewing such an entrepreneurs who approach you after this multiple round with multi-shareholders? Quite an interesting question. I guess I would take a step backward. We have the SberUnity platform, which is not an investment platform. We are not getting the money run through us, but we give an opportunity to investors to find us startups for investments. It's an online venture hub. Online venture hub which combines investors, corporations, startups, and startups can find investments from business angels. We have more than 1,300 business angels who are ready to invest in your startups. But who raises through SberUnity? Who found the pilot project? Yes, we know already that the deals are closed through the platform. Now getting back to how you view, how we do it. Well, we give investors an opportunity to evaluate a conditional syndicator or invest platform which places a deal with us. So respectively, we don't issue recommendations, but we are sort of highlighting all minuses and pluses of this or that partner you raise through. So there are no problems, I think, in ratings of the future rounds. But at the moment of current rating, you as investor can assess yourself pros and cons of this or that player. Thank you, Nimesh. And what about yourself? How do
problem has been solved in India? What they've done is that the line between a fund and an angel is blurred. So the platforms are regulated by the regulator, and we have a single fund as an entity where all the investors, retail investors, will pool in, and that single fund will come as a single investor in the startup entity. This solves the biggest problem of managing hundreds of small investors, right? Because
you mean that's a regulatory or technological platform or regulatory requirement?
Prescribes it, technology enables it. Okay. Right? Cool. So that is how it works, and actually it has simplified a lot of work for the startups because they just have to deal with one investor, and for the investor, they all have a voice, because what typically happens is when you are a small investor in a large startup, exits you cannot control, right? Exits is something that is controlled by large investors. Everybody invests to make millions, to make multiple X, but exits is never under the control of an angel investor. But here, when hundreds of individuals come together, you are having a single entity. That single entity can help you control the exits. So the regulatory environment which enables technology again supports it, and it works in favor of all stakeholders, be it the angel investor or the founders. It's a win-win for all.
I think I would put this statement in one of the headlines. The regulator allows and the technology provides or supports. So the consistency of steps which moves forward a lot of things. Vladimir and Anton, what about your observations? How difficult is the process to be structured for the management of the deal and manage this big number of smaller investors for an entrepreneur, I mean? Well, after the entry, in the process of collecting and for the life when you attract the next rounds. Well, after the entry, yes, first. Before the entry, there's special organizer. Well, actually, if you choose this configuration, there's broker, there's platform, organizer, and registrator, and auditor. So those are the main substances in our configurations. After that, I think that's one of of the great elements for entrepreneurs and founders. That he has several thousands of or even thousands of partners. He has. So you should use it wisely, and that's great potential for you and your future rounds down to IPO to show publicly how you operate with all those investors, monthly, quarterly report, and arrange online and offline events. So this track interacting with investors, some will exit intermediary. Well, sorry, I don't believe you, because a couple of years ago, okay, 3 years ago, it was, we thought that if you have in cocktail more than 10 shareholders, your company is sort of not transparent. And now we say we have 100, and we should be proud of that. Well, I would like to add to what Vladimir said, because, yes, he highlighted the organizational part well, but I would like to get back one step, the question about participation of a bigger number of private investors in the capital. Indeed, there is a problem now in the market that the funds treat it quite negatively. Two aspects, because of corporate rights and managing this mass of investors, and then because you have to get their consent for additional issue, and these problems now is being solved. Similarly, yesterday there was a news that colleagues set up a shareholders company, and and a fund which has invested into a smaller deals. Big number of investors there. But yes, let's applaud. Well, it's not the requirement of the regulator. You mentioned that the regulator allows. Well, our regulator allows a lot, but they are trying to go stricter after the meeting of the central bank with us recently. Well, it's a good thing because they launched the process to look what kind of practices where they are fraudulent, and they are trying to fix it. So I think we have one institutional problem in the country, that to combine this big number of retail investors, there's no specific correct legal entity or form, because ideally it's closed mutual investment fund, but it's very difficult, it's very complicated. But from the point of view of the legislation, that's exactly what we would need. If we would have some venture closed mutual investment fund to collect all those investors and somehow represent them in the funds, that would be cool. Should it be an initiative of the central bank? No, it's ours, because the central bank, it should be our mutual movement. Well, central bank has the different verticals, and one department which supervises us, they have a vertical for development and another for control. And inside one department, they are sort of fighting with each other. And so the central bank needs some feedback from the market, some consolidated feedback that these kind of instruments are needed. And okay, let's then guess and let's dream as to how much time it will take for this project to come true. How much time did it take for crowd investment to appear as a legitimate instrument? You remember the story, and for instance, if you take the period, and how much will it take now this new type of mutual investment funds? We, on our part, submit this idea, been submitting it since 2022. I think that maybe in 5 years horizon, strange it might sound, but that's quite a normal procedure. In 5 years, I think we will have this form in place. You mean 5 years? Well, even 10, I would put it. No. Well, because it started long ago. Okay, shall we wait for a couple of years more? No, you should set up your shareholders company, and then you should do it. You should get it registered, or maybe you should. Well, there are ways to do it, but they are not that convenient, not comfortable enough. Okay, thank you. Optimistic, it sounds, but we will have to wait long. Okay, let's look at the international opportunities. My question to Nimesh, please put on yes. its #1 channel. Technology we are talking about, platforms, investment platforms, allow you to close deals in two ways. Russian investors to invest in Indian, Brazilian startups, and international investors to invest into Russian companies. How do you track this kind of dynamics? Do you see any deals like that being closed? Do you believe in the growth of their numbers? What will happen from the point of view of global investments among countries using the platform?
The primary target of any investor anywhere in the world is to make money, right? And when they see some opportunity in any country where they can make exponential returns, they will look to invest in it. So you put it on your platform that I have an opportunity sitting in Russia which has this kind of potential. Of course, there'll be interest to invest in it. How to enable it is then what the platform enables along with the regulator on how India can invest into Russia or how Russia can invest into India, with minimizing the friction that is caused due to cross-currency, due to regulations, I think, and taxation. I think these are the three main issues that are faced when there is any cross-border investment. I've seen a lot of investments being made from India into Singapore, into US, into Europe as well, right? So I think those are some of the things that have been sorted out, that have been worked upon. I'm sure there'll be ways in which we can work out how it works with Russia as well, right? You just need to see interest coming from both sides.
То есть, получается, интерес есть?
So the interest is there, but no cases and no examples yet, right?
We have to start.
Окей.
There is always a start.
Уважаемые гости, обратите
So, dear guests, from time to time, there's QR code on the screen through which you can ask your questions, and then we will select those who will be articulated here. So can I add to your question? Okay, well, if developing this idea, which kind of IRR of the deal should be for Indian investors to be interested in the Russian deal?
So typically India, so let's look at thumb rule. India inflation, nominal inflation will be around 12%. The public markets would deliver you around 15 to 20% returns every year. So I'll be happy with a 30% IRR. 30, right? I'm not asking for 100, but yeah, I'll be happy if you give me 100. I'm happy with 30.
Мне кажется, это...
Well, it seems to me that that's a demonstration of the friendship between our countries.
Ожидания не завышены.
Well, not very inflated expectations.
Ну выше.
Well, it's just higher than deposits, of course.
Может быть, уже...
Well, possibly there are some movements from our country. Do you see any requests from entrepreneurs here, whether they push us to set up a platform for global investments? Well, it seems to me I can add here, well, we, through SberUnity, we can see what startups are placing their request for investments, and on our platform, it's not only Russian startups. We have about 15 or even 20% international startups, and some of them through SberUnity already raising money not in the Russian jurisdiction. It can be very different countries, India and other countries also of the Eastern Asia and MENA and Latin America, and investors do respond and they communicate with those startups, and we can see that the demand is there, and startups are coming to the Russian platform to look for money for their international jurisdiction, and we're helping them out. Great, 15%. Let's remember the number, 15%. Okay, the most unpleasant question about the quality of audit and preparation for the deal. Yesterday there was a session of mature venture funds saying that no crowd investment service can provide thorough due diligence, which allows unfair startups to raise money, and then when full-fledged due deal starts, they are it's shameful. So what are we doing for that? You as experts, how your legal base is growing? I know. Well, we decided to split. So still, you are You're going to share the answer. Okay, we should split it into two parts: the conceptual and second technical. How to technically. So I am going to take the first part. So, by essence, what do you mean? What we mean by fraud is when they are plotting to steal money. I haven't seen any big number of such cases in 5 years. Just a very single. That participants are allowed to the platforms, because the platform is not a lending organization, not financial organization. So we have to identify their past history and also purely fraudulent companies have never come up to that stage because it's very difficult. It is easier to set up an OO to raise money for some agreements, which is simpler and more profitable
for the fraudsters. But if we're speaking about the frauds, are you talking about bankruptcy or increased indicators? I think projects raising money from the funds usually have this venture hockey puck, hockey stick. And the question is, where is fraud, where is not fraud? But yes, sometimes there are incorrect assessment of the market, but this is not about instruments of raising. This is about preparation of a project. I'm giving the floor to Vladimir to answer. Well, getting back to configuration for the whole process, there is a platform and organizer. Since I'm not only representing a platform but an organizer, before placing, we work with the company for 6 months first, and we're scoring the company. So it's full-fledged due deal, isn't it? It is. In addition to that, audit from auditor's company before placing. If it is placing in make start service, then we add due deal from top 4 companies certified by the Moscow Exchange. Yes, there are some specificities, and costs are growing, of course, with this process. But in the organizer, we accumulate the competences on the audit and due deal internally. We get very deep into the accounting and the legal part of the company. We talk to almost every founder and partner, and we understand where everything comes from, and tax and legal and financial audit. We do it inside. If we understand that somewhere we lack competences, if we, for instance, attract partners who have more expertise in this. But why on the next rounds investors might be skeptical about crowd investing? We should split it. Thinking about this process, there are 2 concepts of working of a platform operations. First, platform bringing together various types of participants: SPV, legal entities, investors, and issuers. And in this case, concept-wise, this is information IT service, that the task of which is to disclose information about the deal as fully as possible, and investors make their opinion, make their decision on the deal, on investing. And the other type is platform syndicators or clubs who specialize in a segment of a market, and they are good in this segment, and they prepare projects from this segment of the market through organizers, but sometimes on their own. So in this case, they are more actively they're more active in preparing the parameters and can assess the assessment, can impact the assessment within a new round. Both ways are good, but you have to understand that a project might have excessive expectations, too much expectations. The assessment should not be too high or too low. If we're speaking about assessment approach, it is actually defined by the project itself. No, there is no question. When after IPO, company is going down by 20-30%, what does it mean? It means that when placed, the assessment was exaggerated, but the infrastructure is much more serious, so that prepares the company for placement. That's why it's not a disease of a segment of a market. This is just the problem of approach of placing a deal. There are good deals with adequate founders and teams and assessment, and there are exaggerated, inflated assessment and projects. And
the Indian perspective here, the way it works there. So I think one thing is very clear: platforms are not investment bankers. Platforms only provide access to deals which otherwise are not available to angel investors. And to that extent, Deals on platforms are subscribed by a lead investor. The lead investor will do all the hard work of getting a due diligence done, getting a financial, legal, business due diligence done, and then only then it comes on the platform. So the platform is basically helping in filling up the gap, but there is a lead investor and an investment banker who has done the hard work. The platform will only look at certain parameters where it's a fair deal. Platform is not in the business of getting into the DD part of it. And that is how it has worked. Of course, the DD report is available to the investors. The information is provided, but it is not the onus of the platform to go into the details on whether it's a right deal or not. So I think that is a differentiator which helps and works.
Да, ну как раз именно такая
Yes,
роль, да,
this role of the aggregator or information provider is probably
проверки.
bringing out questions about the depth of check and the quality of deal. Platform cannot be held responsible for this. We have the same position. You put it right. The fund can be lead investor in the deal and can prepare the deal how they see it and attract retail investors. But I have to mention that two funds in our country are going this way, and both, by the way, were present in the previous session, but they criticized the idea first. Vashod and Kamaflow. Vashod has their own platform, and Kamaflow, as far as I know, they have a partner. So they lead some of the deals and put them into retail. After 4 years of work, they actually ended up with this idea. Very good. So we spoke about how to get safer into the next rounds and qualify the deal in a safer way. But new investors with small checks, how can they protect themselves against losing capital? Do you do expertise for people who want to invest through the platform? Let me add to this point. I think investor who is investing small checks should also be responsible for where he is investing. How can we help him to make this decision? Looking at who is leading the deal. If there is a platform, if there is a lead investor, if yes, then who is he? And if it is a large venture fund for you as young investors, this means minimization of risks. If it is a syndicator who has been long in the market with a track record, it means lower risks for you. If there are no such things in place, then you have to analyze the parameters of companies and the parameters of startup to make your decision about investments. And we understand that investors of early stages and investors who just started or later stages or those who just start investing into startups, sometimes they do not have experience and understanding how they should analyze startups. And knowing about this problem, we in Sber, we launched a program together with Moscow Innovative Cluster Venture Academy program, within the framework of which investors can learn the basics of venture and start investing through investment platforms, through syndicates, and find deals through SberUnity and get into deals on their own. So we give investors all the opportunities to become venture investors. And the risks and the responsibility for the results is on investors anyway. Every investor should understand that. Yesterday, I noticed here in the forum what number of people are having badges with investor titles on them. I think they're all graduates of Venture Academy, and now they have this role on their badges. So we will all become investors soon, I think. But before we go to questions
У меня есть один вопросик.
from the audience, I have a question myself. Just let's imagine a not very much qualified new investor with a check of $1,000 mentioned before. Our esteemed experts, what are your recommendations? What should be done? What shouldn't be done at the beginning? As Gleb mentioned, look at the leader, look at the syndicate. Probably there are other triggers to protect the investors.
I can start with a thumb rule that we typically use, and I advise all people who want to start angel investing, because angel investing is very attractive. One, you should be ready to lose all your money, right? This has to be play money, right?
Будьте готовы потерять, да, давайте еще раз это.
Yes, indeed. Let's focus on that. That's important.
Second is you should be ready to invest in 30 startups, right? Over a period of 2 to 3 years. The reason being, for a startup to succeed, there is only one way. But for a startup to fail, there are 100 ways, right? So you should not get dejected if the first couple of investments you lose money, because you need to spread your bets. Because what happens is the IRR that I spoke at is at a portfolio level, not at an individual company level, right? One of the companies will give you 100x.
Нимаш, позвольте я...
Nimesh, may I? But how can we make the spread of the portfolio for 20 companies with $1,000? What are the checks? $20 each?
Saying it has to be 1,000 into 20 is what you plan over a 2 to 3 year period. It's not at one go, right? You need to create a portfolio of startups. You cannot bet all your money on 1 or 2 startups, is what I mean. You need to diversify your bets. And that is the only way it works, because it has been proven worldwide that 9 out of 10 companies are not able to raise Series A money, right? So 9 out of 10 companies fail, right? So that is the reason why I recommend spread your bets over 30 startups, keep a 2 to 3 year horizon, and you can bet small money. But yes, I think this will mitigate the risk of you losing money, and I'm sure you'll be able to make money. So that's my 2 bets.
Спасение утопающих, для друг...
So yes, saving those who are drowning is the business of those who are drowning. So thank you very much, colleagues.
Тут я бы вспомнил нашего великого мыслителя
I would refer to Andrei Arshavin. Your expectations are your problems, he said. So let's not get into this trap that you can do 1 million from 1,000. I think that you should take it as payment for your training, sort of, and get deeper into the process and diversify as much as possible. Not be in a hurry. Go to venture academies. $1,000 is enough to invest and have a certificate, as far as I know. But the key thing is that you get deep into it. And as I mentioned, culture at the beginning, we have to develop it, and we need to understand that this is a high-risk story, and then make a decision whether you need it in the future, but not taking it as a game, as it was the case with trading. Crowd investing and such opportunities should not, I think, face a situation where they are devaluated and such mass popularization of such thing that it became something negative. Anton, could you please add anything? Ideally, it should become very mass thing, because you're a platform. Of course, you need mass approach. No, I'm speaking about institutional approach. It creates a class of entrepreneurs that can go on this side from investors' side and create the liquidity in the market that can be source of funding for entrepreneurs. I just wanted to mention that with a check of $1,000, well, there are few opportunities to invest adequately in our country. But I agree with what you say. You should start with something, because you at least, well, yes, you should go through a training program. And even if you select from 20 projects, 2 or 3, and you invest 20,000-30,000 rubles each, you actually cover this path. You can replicate further on with larger checks. So just try and invest into things. I would add something. $1,000 is not enough. If you do not have more and you do not know where you can find them in the prospect of a couple of years, you should not go to venture. I think accumulate more money, wait a little bit, so that this money is not is just part of your portfolio, 10% of your portfolio. That's when you can go in there and start. If you're not ready for this, and if you do not know how to invest into another 19 companies, as mentioned by speaker, please don't go to venture. Try to earn money on something else. I would not agree. You should be ready to lose them. Yes, you should create this ability to lose, because, frankly speaking, it's well, chances are high that you lose the money. It's not about losing 20 or 30 million rubles. You lose without understanding how to invest properly. If you invest into one project, it's also not the right thing to do. I understand what you mean, but then we limit 50% of the population of our country in the opportunities to invest.
Last point on what you were mentioning. So what happened was, a lot of platforms in India have been around for now more than 10 years. And to grow, they started mis-selling. Right? They started to sell startup investment to people who actually would never invest even in stocks. So because of that, the Indian regulator has just very recently come out with a rule that if you want to invest in a startup, small retail checks, you need to be an accredited investor, which requires you to have a certain threshold of net worth.
И, видимо, пройти
That is
какой-то...
what regulation will bring. When it goes to an extreme of mis-selling, the regulator then steps in. So you have to balance it, right?
Да, ну то есть порог все-таки.
Yes, the threshold is a little bit complicated, more complicated through a certification accreditation process. That's important. So 1.5 minutes to go. Let's look at your questions. We have through the QR code in our app.
Я пытаюсь.
I try to zoom it a little bit.
Как долго вот.
This is it. For how long international market will be scared of Russian money? I mean, we're speaking about trans-border investments. Can Russian investors
Заходить в международные
get
проекты?
into international projects? Well, I think there is no such question that international investors are afraid of Russian projects or vice versa. It's about the cost of transactions for transborder processes and also the risks of projects. I think before inter-country infrastructure for payments is here, you know, the BRICS Bank is now being set up. Rupees and renminbi are growing in the international payment turnover. After the payment infrastructure is in place, and there won't be any fears to invest into Russian projects or Indian projects from Russia. I think we will see demand for this as a means of country diversification of a portfolio. Gleb, I thought you wanted to add something. No. Okay, we have a larger question. Where market investors can get more information about specificities of investing into tech startups to make better decisions when entering the deals in general. I think I should repeat something here. We, Sber, together with Moscow Innovations Cluster, we launched the course in Venture Academy, and now we're enrolling for the recent Venture Academy that is focusing on projects of the Far East. You can all join it and go through the training. This is an online training with experts from funds who spoke today. Voskhod spoke today, and they are part of it. So we're looking forward to see you in Venture Academy. The training is free of charge, and you can have practical skills from this training. And 3 short questions to go. Could you please tell us about the experience of international investing into LATAM countries? No? Nothing to share. Okay. Question about the fund. What industries your funds are prioritizing, and what niches and markets you mostly believe? Probably, Nimesh, this is your question, or our platforms. I can speak on our side. We're specializing in retail investors, and as our experience shows in this sector, retail investors respond on what they understand quickly, things they use every day. Probably they buy real estate or something else. When you are in retail, non-professional environment, you're offering a project of deep tech into such environment. Of course, it's a more challenging thing to explain and promote, and people spending first 30 seconds, they do not understand what you're talking about, and they won't go further. Very good question. Anton, this is your turn. I think cost for structuring and preparing the deal. If a company is not in profit, should we go into crowd investing? Well, the decision should be made based on the goal of your investment strategy, because crowd investment is a means to attract retail money from for potentially long-term perspective going to IPO, and that's why the track might be this way. Because alternative is working with funds, M&As, and mergers and things like that. But if a company decides to work with retail, then it's a separate track. As for costs, I think in average it's about 500,000 the preparation, up to 1 million rubles, and also the fees to attract money. Brokers, I think the cost of money is 7 to 9% from the value of the deal, but the most part is post money. Thank you very much, colleagues. Brave new world of investment. We all see how, according to Anton, we will all become investors participating in such deals, and we will be trained in Venture Academy, and we'll start investing not only in Russian but international companies thanks to platforms we mentioned during the session. Thank you very much.